Hi, I am Akshat Malhotra. This isn't just a standalone video, but a part of an entire course called The Fundamentals of Personal Finance. In Module 1 and 2, we covered the key concepts and went straight into creating an effective budgeting plan. Now, in Module 3, we deep dive into the various financial assets where you can park your money in. Oh, and don't forget the free Excel calculators that we've created just for you. The next up is the commodities section, something that we are very fond of investing as Indians, an asset class that we love talking about, gold, right? We all love buying gold. And thinking of buying gold as something that you want to wear, an ornamental value or jewelry, versus investing into gold are actually two different things. So let's understand from an investment perspective, what are the various options that we have in order to invest our money into gold? We can invest into gold using any of these four options. Number one, buying physical gold. Number two, investing into a sovereign gold bond. Number three, through gold mutual funds or ETFs. And number four, through digital gold, something that is very commonly available these days. Let's deep dive into each of these. Physical gold, the easiest form of going and buying gold. As we all know, we love the jewelries that are available in the market, and we love buying them for our spouses, for our parents, even for our brothers and sisters, because it really holds a strong value, right? It's emotional, as well as it looks something solid to be gifted. But buying jewelry buying gold in the physical form through a jeweler, is that really an investment? Maybe yes, maybe not. And I'll tell you the reasons why I believe it might not be the best sort of investment if you are only thinking of it from an investment point of view and not from an ornamental point of view. Not the ornamental value of it, right? So when we buy physical gold, we've got to think about paying the extra making charges to the jeweler that comes on top of the gold rate. So let's say if you're buying a chain, the jeweler might charge you 10 to 15% extra on top of the particular gold rate of that day. So that's an additional cost that you have to bear at that time. Secondly, when you bring gold to your home, you know it's not very safe to keep ornaments at home. And so we generally tend to buy lockers in a bank. Those lockers are also charged on a yearly basis, ranging from 5,000 to 10,000 rupees based on the size that you buy those lockers of. And that too is an additional cost on top of your investment. So you could say that these are few of the maintenance costs when it comes to investing into physical gold. And so, as I said, only from an investment point of view, this might not be the perfect option for all of us to invest. And so there are three more options through which you can invest into gold. Sovereign gold bonds, a Government of India scheme. As simple as the government says, let's say today the gold rate is 4,700 rupees a gram. So you pay me 4,700 rupees. The government says you pay me 4,700 rupees per gram. I will allocate a gold bond on your name. 8 years from now, it comes with a lock-in period of 8 years as of today. 8 years from now, the government, whatever is the rate, prevailing rate on that day, let's say the gold goes up to about 10,000 rupees. So on that particular day, the government will return you 10,000 rupees against that particular bond. On top of this, you'll also get a 2.5% return per annum credited into your bank account because you're investing into that sovereign gold bond. So that too is a plus point. And then, all your storage charges, all your making charges, all of those things go away. So yes, it is a high maturity period. It is illiquid, but it is one of the safest options. comes with a sovereign guarantee, a fixed rate of return, 2.5% as of today. And in addition to that, if the gold price appreciates, the bond value appreciates. So sovereign gold bond is one of the options to invest into gold. The next one being gold mutual funds or ETFs. So very similar to how the mutual funds, as I explained in the previous module, work, investing or diversify our money into stocks, fixed income assets, and other avenues. Similarly, they also invest your money into gold schemes, into gold given by the various bullion traders that are out there. So that is another option for you to just start investing into gold. You could create an SIP, or you could just park in some money into a particular gold mutual fund. In this case, all you pay is the expense charges. I'll cover expense charges in the upcoming modules to the particular fund manager, but there are no additional costs that are involved. And finally, something which is very common these days, something which a lot of people are preferring, is the e-gold or the digital gold. Because you can actually buy digital gold for as less as 1 rupee. And that's easily available, it's easily redeemable, the liquidity is really, really good. Today, if you have 100 rupees, you can just go and buy a digital gold. So what actually happens, let me just take you a little back and explain you the behind the scenes. The bullion traders that are there in India, bullion traders are the people who actually hold gold. So when you buy and digital gold through any of the apps, the bullion trader receives the order. They actually park a particular amount of gold, whatever you've bought, and store it into a vault, store it into a particular place, and then assign you that particular gold in the electronic form. If the gold price increases, your money increases. If the gold price reduces, your money reduces. And so you basically just pay for that particular gold. You do pay some taxes on top of that for holding for a long period of time. Then there comes a little bit of more charges, which we are going to talk about in the mega day. So don't forget attending that. But most of the other charges which come associated with physical gold and others, they kind of go away. So this also is another option through which you can actually invest into gold and enjoy the gold appreciation. Let me know in the comments which one would you prefer to buy and invest your money in. If you have any questions, please add them in the comments below and I will make sure we answer them. Do like, share and subscribe to this channel.